Wednesday price action was all about reaction to the latest round of U.S. tariffs on China and the potential implications as the U.S. administration continues to push forward with its protectionist policy. All of this has the ability to shake up financial markets in a way where the U.S. dollar could be more exposed against the other major currencies, with the U.S. trying to redirect flow away from the buck. The accompanying deterioration in global sentiment that might come from this risk could also offset dollar weakness against the more risk-correlated commodity block and emerging market currencies that are also liquidated as things get more tense. There will be plenty of reaction from the NATO summit that will need to be monitored, and this theme will continue to command a lot of the attention in markets. We've already seen the Fed weigh in some more on this risk in last week's minutes, seemingly reprioritizing policy normalization drivers, with downside risk to U.S. trade policy moving up the list. Interestingly, this comes at a time when the possibility of the return of inflation could put central banks in a more difficult position. Today's hotter-than-expected U.S. producer prices didn't really have much of an impact, and the Fed has already said it wouldn't be concerned with inflation overshoots in an effort to alleviate some of that pressure that might come from rising inflation. But this should be something to watch as central banks around the globe as we move forward in this period of time where central banks are needing to move the other way on policy but are still reluctant to do so. Wednesday's Bank of Canada decision was also happening with the Bank of Canada choosing to move ahead with another rate hike, taking Canada rates back to their highest level since 2008, where they now sit at 1.5%. The Bank of Canada needs to be thinking about its own vulnerabilities to U.S. trade policy as this relates to the fate of NAFTA, and while it seems to be downplaying this risk right now, it could be something that makes for a very difficult situation for the Canada economy if things don't work out with NAFTA and rates are moving up. We would therefore caution against any expectation for sustained appreciation in the Canadian dollar from rate increases. Looking ahead, the market will keep monitoring headlines on global trade while also thinking about a Thursday calendar that features Aussie consumer inflation expectations, German CPI, Eurozone industrial production, the ECB minutes, and US CPI. Things were a little quieter in the UK on Wednesday, and understandably so, though Brexit updates will also need to be monitored going forward. That's all for now.